There we go, 1900 hours on the 29th of the 6th, 2026. Hi Mary, welcome. Hi Janelle, thanks for being here. Peter, hello, welcome to you. I do have a lot of notes to share with you and to get through this evening, so hopefully we'll do that in good time so that the recording isn't massively long. But there are lots of things to cover, and I think, well, all of them are relevant. So, to begin, August is approaching quickly now, and as it has for many years before, I expect the last week of August to deliver well for us. On that note, I'm thinking or planning to run extra or extended sessions while still avoiding any personal burnout. So, the Tuesday morning session may run right through, with some breaks of course, but 9 AM till 15:30 or 1600 even, maybe. Mary says, I didn't see last week's clinic in the chat. The recording, Mary, no, I probably forgot to post it, but it is in, on the YouTube channel and you'll find it there. Hi, Robert. The Thursday session, we can aim then for an early start of maybe 13:30 without omitting our 9 AM session, but run that through to 1800. Both of those are ideas and will be dependent on the price action and the actions of our members in the sessions. Members who have joined already then are well poised to take advantage of the last week in August. Then we need to remind everybody of something, and here it is. The following instructions were given back in July 2020. There are some of you on here who need to hear this, and it will help you. There is no such thing as a 100% winning strategy. So either you trade mechanically and deal with the limitations of your chosen strategy. In fairness, we know that the T2B2 has been well tested, well traded, and it delivers far more than it might ever take away. Or you can learn, with me as your guide, to filter out the good, the bad, and the just plain ugly trades. The former requires that you have a cast iron mentality to continue through a loss, and therefore very strong discipline. The latter requires that you put in a serious effort to learn the clear and present difference between the two. You can learn where, when, and why I might be interested in taking a pivot trade, for example. There are many aspects to a trade, far from a simple scenario of entry, management, and exit, which there is on the T2B2, of course. But when we get more advanced, there is the setup, of course. Largely that's your strategy, but there is also the preparation or the run-up into the setup to be considered. There would be the higher time frames in there. It seems to me that this is the area that many traders find confusing. I'm not quite sure why though, since we've been banging the DRS drum for probably feels like centuries now. Divergence, rejection of a line, and a signal. But the divergence and the rejection of a line, those two things alone can be the run-up to your setup, preparation. Then we need to factor in trend or counter trend, and there is an easy way to say it. Location, space. There was another member in another company that I worked with many years ago. I don't know if it was many years ago. It seems like many years ago. Perhaps it wasn't. What was his name? Began with a T. Tyrone. Tyrone used to say location, space, location, space, location, space. Now, location being where are we in relation to anything? Anything pertaining to support or resistance and on multiple time frames. Nice one, Phil. It is indeed, Tyrone. Space being how far to the next anything. Often I'm asked how I get in or out with profits when some find that tough. and you're on. You asked me a question. I'm not going to name you, but you did ask me that exactly that question. Again, I'm not going to name you. And the best answer I can give you, divergence is the best answer I can give anybody. Advance warning for getting in. Advance warning for reasons of management, as in lock in tight, lock in loose, lock in something. And finally, divergence for the out. Also then, we need to discuss levels I give at the open and the differences. Some of you, one of you at least, messaged me. He's not on, but he will watch the recording, I'm sure. I'll send him this individual recording when it's finished so he knows it was him I was talking about. The differences of the levels. Now this is where we can go into looking at some indicators. If we see the numbers on the side, this is what we're talking about. We got 52,200 at the top, 52,160, 52,120, 52,080, 52,040, and of course in between those two is one of my favourites, the 060, 40s and 60s, 60s and 40s. They're amongst my favourites, as are the big round numbers, the 52,2, the 52,1, the 52,000. Big round numbers, very, very useful for us. Now there are a couple of ways to deal with it. One is, you all know that we start our 2 p.m. session at 2 p.m, 1400 hours. The US market only opens at 14:30. So let's assume that it's 8 a.m, but let's assume that this 8 a.m. is our 1400 and price moves down to a level 52,040. You can look on your charts and see that that 52,040 is in fact 52,000. Okay, a simple mathematical formula. Take away the 40 from my screen. So if I say we're all going to go long, or I'm going to go long at 52.1, you're going long at 52.060. 52.1, 52.060, 40 pips below. Do you get it? Simple maths. Very simple maths. Hopefully I got those maths right. The other way of doing it is, if I make all these visible, I'm going to make the first one visible. This is one of our pivot levels right there. Chart should not be difficult if using ThinkTrader, says Claude. Correct, Claude, but not everybody sets up ThinkTrader. Some people use TradingView, CTrader, MT5, MT4, and there's a reluctance, or it's difficult, or whatever it is. It is what it is. People don't always set it up. So I'm here to tell you how to make the mental adjustment if you're not using ThinkTrader. So there's a Camarilla level and it's 52.077. So if I happen to say, okay, at the 230, if this was 230, I'm going to place an order to go long at 52.077. Well, minus 40, that would be 52.037, wouldn't it? Maybe it's only minus 10. Whatever the difference is at 1400. Now, if you join the session at 14:29 and 30 seconds, that's on you. And my response would be, well, bog off and get out of bed earlier. But if you join at 1400, have a look at what the difference is. The other things we can use are my higher value EMAs. And there they are on screen, all of them. Those are the EMAs that we use. If yours are the same colour as mine, great. If they're not, I'll remind you that there is a document in the trading folder that I shared with everybody, so there's no excuses, and it does say the definitive indicator settings. That's what it's titled. So you can make your indicators the same colour as mine. And then that way, when I give you a level, this EMA here, the maroon, I'm not even going to give the numbers out because I do want you to check that document. Once price goes above the maroon indicator, we're going long with a stop at light blue and a target at purple, or whatever the instruction might be. It's what I'm going to do. over here as we pull back. If we break back above pink, I'm going to go long back above pink, or I'm waiting for white for whatever reason. I might be waiting for white. And if I add our MACD, occasionally we'll be able to see instances, examples of divergence or convergence, and people will be looking at that and saying, well, there was no divergence there. There was, it just doesn't show on this chart. You all know I use a 2 minute next to a 1 minute, and if I scroll back to 8 a.m. now, you will see that there was some example of divergence. It looked better on my, what are you called? What are you called? On my my MT5. The divergence better on the 2 minutes on our other chart actually. But there's a bit of divergence within the indicator there. There is also the oversold, and we crack back up above oversold. There was light blue, and we crack back up above light blue. So if I say I'm going long at the red line, you can either minus the numbers or look at what your red line is at. All of these, look at them, there is 1, 2, 3, 4, 5, 6, 7, 8 lines upon the screen, notwithstanding the 40s, the 60s, the big round numbers, notwithstanding any of those things that you might want to use as well or instead. So run it again, 1, 2, 3, 4, 5, 6, 7, 8, and if we go through them, 9, there's lots of other Camarilla levels in there that we can look at. The central pivot on the Camarilla, we haven't gone near it there, but it doesn't matter. That's what I'm talking about. If your levels differ from mine, see there, exaggerated bearish divergence, a double top, a lower high, with a higher high on the line. That means we've got some divergence within the indicator. And if we look at how far it dropped, we've got maybe a 52.170 up here. We've got a 52.115 here. There's 60 pips in the drop there in 1, 2, 3, 4, 5 bars based on divergence within the indicator. So it is a very real thing, and it does help you to get in sensibly, manage your trade sensibly, and get out sensibly, as well as looking at patterns, the M's, the W's, the teacups, the head and shoulders, the inverse head and shoulders. All of those things are still things. None of them went away. None of them disappeared. None of them said, you can't use me anymore. They're just there to be learned, stored in your memory, and ideally maintained. Now, I'm going to hide all of these indicators for a moment. And I'm actually going to delete these two because I want more chart. More chart because moving on then for this week, understanding charts. Unless you want to remain completely mechanical, as stated already, we're going to look today at the Darvas box. An indicator session this week then, and some solid learning with thanks to Nicholas Darvas. Breakout trading is practiced by many technical traders, and we use it ourselves during our LOB sessions. Hence, I'm looking at 8 a.m. here. And through the US Open sessions too, we use the Darvas box. You all know I place a level by where I am prepared to go short, a level by where I'm prepared to go long. Let's assume for a moment that this 52.120 is the lob. Well, it's easy to do. We'll draw one Darvas box on here first. There is a Darvas box. That's what he looks like. A Darvas box, I've got to click there. We cover the highs, we cover the lows in the time running up to the time we are looking for a breakout. And yes, he's gone early, but we saw on, was it Thursday, when the Dow broke and gave us 240 pips in, I don't know, 11 seconds or something stupid. It wasn't 11 seconds, but it was very quickly. And it very clearly went above the level where I wanted to go long and straight to my target, which the first target was at 52,400, wasn't it? Ultimate highs then. Claude, you probably remember the level we get. Must have been 160 if we were looking for 240 pips at the US Open on Thursday, I'm talking about now. So, a Darvas box. Where was I on my notes? It doesn't mean we don't keep an eye on the idea throughout the trading day. as with many other approaches to trading, it does entail a degree of observer subjectivity. Or we can add the indicator and continue to allow ourselves be guided by the mathematics of it all. I want to read this bit again. Breakout trading is practiced by many technical traders, and we use it ourselves during our LOB sessions and through the US Open sessions too. It doesn't mean we don't keep an eye on the idea throughout the day though. Now, Claude says Dow was up 170 pips. Yeah, we took the 240 though, didn't we? From 52,160 up to 52,4. On Thursday now I'm talking about, Claude. Anne's got a screenshot and I think it's about Divergence. I won't open it just yet, Anne, because I'm still recording, okay? No, I mean go up that level. Okay, Claude, I won't worry for now. Now, we will of course do exactly that. Exactly what? We can add the indicator and continue to allow ourselves to be guided by the mathematics of it all. We will of course do exactly that. First off on the blank chart, but then in conjunction with one of our strategies to see how it fits in with the DRS ideology. You know, our divergence, rejection of a line, signal. Again, Nicholas Darvas is the man to thank for the Darvas box and the subsequent systemized breakout trading developed more than 60 years ago. Back when it was developed, Mr. Darvas was looking at a weekly chart and was more focused on individual equities. We're going to use it on our 1 minute charts and see how it behaves for us, or how well, or if it behaves well on our NAS and Dow charts. Well, there's the box that we can draw and it breaks out. And that's where the LOB, the London Open breakout, comes from in terms of our, our DAX trade in the morning there. But there is also an indicator, and here it is. It's the Darvas box. If I show you the indicators list, you see Darvas box right there at the top, and you can simply add it. I've color coded this one to suit me, so green for up and a big, bright green, and red for down and a big bright red. You'll note there are no numbers to change. There's no EMA, there's no period multiplier, nothing. It's just a Darvas box. And it's kind of like, the Donchian channels where they move up and that's a signal for a buy. They move down, that's a signal for a sell. Or the upper moves up and the lower moves down. And that's the signal. And here we break out of the box and that's the signal for the sell. That's it. Or the box moves up and that's the signal for the buy. Breaking out of the box or moving up, that's the signal. Out of the box or moving up, that's the signal. The line then represents, now remember I say to you guys, it can go up through a line, but it can't come back. So tell me, or it can go down through a line, but it can't come back. Let's get rid of our drawn Darvas box for a moment and tell me please, did it go down through a line right there? Well, it did, didn't it? There's no ifs, buts, questions, issues, nothing. It went down through the bloody line. Did it come back through a line there? Well, it did, didn't it? There's no doubts, issues. No one can say, yeah, but me bottom. It came back through a line. It went down through a line, it came back through a line, and that's a loss. It went up through a line, and you have a chance to take some profit. Bear in mind, we've got those EMAs. We've got that big round number over there, very big round number of 52,200. So price moves up away from our 160. There's 40 pips from the 160 with an H, by the way, outside, inside, outside, H. So one of my price action thingies that I quite like, and a move up. Pips then, coming back through the line. If you ain't already out because of that line right there, and you wait for there, well, that's on you. And why would you do that? There is plenty of reason to get in and get out just using a Darvas box. There is plenty of reason to get in selling, and then we come back through the line. We also reject 52,000 and 60, no, 80, 100, 52,100 is there. So we've rejected the line with a low test bar and one of them there fractals that we like. Why would you hold it any longer when it breaks the high of a new bar? When we're looking at range, I won't let it so much as break. Look at the gap. See that gap? When we're trading range and we see a low test bar testing something that's of interest to me, I won't let price go above the close of that bar without taking pips or locking in somewhere sensible. That's how, sir. You know who you are. You asked me the question. That's the how. That is the how. I use that kind of thing. We've got a big high test bar, another high test bar, an inside bar, a little H pattern there. Look, outside, inside, outside. We're testing the 52.2. In this bar, this red bar here, I would have taken the profit there. But that's me. I'm a profit taker. Probably should make a song about that. Remember that old one? I am a cider drinker. I am a profit taker. I'll take me profit when it's there, because I'm not waiting. And that's all. Claude said, just makes a busy chart, but interesting. Exactly. I'm not suggesting that we add this one, Claude, but I am trying to drag everybody into the learning phase. Here we are on an as at now basis. Did we break up through a green line, a Darvas box? Are they tweezer bottoms with green on the right of red? That's the way I like it. Is it technically a bit of an inside bar with a breakout? Yeah. Either way, yes. So if we looked at that one, we could say, and use principles, the accounting principle, is it true and fair? And Mary knows about that principle because she's probably the most qualified person I know. Is it true and fair to say we crossed through a line? Well, yes, it is. Now, is it true and fair to say we stayed above that line even with the low test bar? Well, yes, it is. But did we come back? And you all know that 60 is one of my levels. We came back through a 60 there. Well, then them's your pips and all. But it carried on, James. I don't bleed and care. It hit the 52.4. You've got a reason to take it again here, and you can have that in 2 bites. 1, 2 bites. Being safe, being careful. If we added our strategy or some level of divergence in there, we would find that that was a necessary thing to do. And that's not what I want to do. I'm going to go right click. I'm going to go load a template, and I'm just going to put the dynamic edge. That's all I can put on here. I can put dynamic edge, I can put red light, green light, but dynamic edge is, everybody's familiar with it. It's the DT2, it's the wada. There's our tweezer bottoms, and it's a pivot off purple, and it's in buy hopper mode, and it gives us a fast hopper on the early warning TSI there, and we get along at about this 52, I'm going to say 60-ish level. It could be 70. It's there or thereabouts. So you've got an invalidation or a stop about 20 pips away, and then a target at 52.4 would have been mine, but that's because that's what it was on Thursday. It runs. The red bar doesn't break the low. He does. He breaks the low, but he holds above a big round number there, 52.3. We battle at it. We break through it. You might have had 1, 2, 3 entries at this one. I don't care if it takes you 6. What I care about is, did you get the pips? Did you make some profit? That's what I want, you know. I can see this is a 2-minute chart. Oh yeah, I'm still on 2 minutes. Apologies. Thanks for that. Back to a 1 minute. 1 minute is the signal I'm looking for. I flicked it to a 2 minute to show you that divergence and then forgot to put it back. So there we go. That's our strategy and the Darvas box. I'll put him back on for the moment. Add indicator. Darvas box. Thank you, Mr. Nicholas Darvas. And there he is. And again, is it true and fair to say we went up above a green line? Yeah, that's where the signal is anyway. So if you go in and out and take a small loss on the first one, I don't care. I really don't care. It happens. You stick with the process and you let your mentality beat the odds, and there it is, the run up that is your profit, and it's good profit too. Scott says, James, I see this is a 2-minute chart. Better for analysing the Darvas box than on a 1-minute chart. I don't care the time frame. I want it to be used on our time frames, and we trade on a 1 and a 2. There's the NAS. I've no idea what it looks like. There must have been, oh, I thought there was a big spiky bar there. Must have been some news. Once again, look, we're in buy mode. We're above the line. We're in buy hopper mode. So you can take the buy here, finger on the button until we break the line. It comes back. It's one more line. You can say, I'm out. I'm back in. I'm out. I'm back in. I'm out. Are you with me on how we're looking at that? Can I just get 2 or 3 yeses that, yes, I see how you're looking at the Darvas box. Yes, says Mary. Yes, says Scott. Thank you, everybody. And now I'm going to delete all of those indicators, remove all, and I'm just going to put the Darvas box on there, zigzaggy line, add a Darvas box. And the reason we added it is, I forgot the reason we added it. I wanted you to look at an indicator. I wanted you to look at a breakout. That's it, breakout trading, our lob, our 230 when we draw the lines at 1430. Interestingly enough, let's scroll back to 1430 and see what lines we would have put on there. Well, we wouldn't need, well, look, there's a big round number there. It breaks through the line and it comes back. I'll guarantee there were some other EMAs in the way as well. Breaks through a line and comes back. That's my point, everybody. We can let it go up through. We can't let it come back. We can't. And if that means scratching the trade for a break even or a 2 pip loss or 5 pip loss, okay, then that's what it is. But it doesn't break the line again here. And I wonder with our strategy, what can I, no, I don't want to just put an indicator. Yeah, you know what? I'm just going to put an EMA on there. It's part of the dynamic edge. You know the red and the green one? That red and green one is a 13 period. So I'll make him a 13. Imagine he's red and he's green uptrend. We break above him there and we stay above him. So you could go in, finger on the button, finger on the button, finger on the button. Happy days. What are we rejecting up here? Could be 29.6. So there's reason to take the profit there. But if we were to look at that, the profit is, and let's see, you don't wait for the close of the bar. So you're in, your stop's down here. 40 pips, we'd be looking for 80 then, 69, 70 and 90 and 100. There's no way I'm going to be up 120 pips and not take the 100 as it comes back. That's just me. That's just my way. So there it is, ladies and gentlemen, the Darvas box. Whether you draw it, what did we do to draw it? We took this thing and we drew it. Whether you draw it and wait for the breakout in a period of range, click your EG, there you go. And when we do break it, boom, you can go in, we can't come back in. That's it. That's what I'm looking at. And once again, everybody, divergence is what it is that helps me get in quicker, out quicker. You can see the divergence here. You can't because I don't have the indicator on, but I can see it without having the indicator on. And there we'll put a MACD and there it is. Look, we make him bigger. You can see very, very clearly. I hope you can. Higher highs, lower highs. What's happening? Divergence within the indicator right there. And then suddenly you get an entry. I'm going to just, for my feeble brain, 29,520 is your sell entry. Yet we come back through a line, but still red. You know, whether that's 1 move, 2 moves, 3 moves, I don't care. 520, there's a 29,020 down here somewhere. It's just off screen. So if we said 29,120, then in between those two, there is 400 pips. And I guarantee it, if we popped our T2B2 on there, it would wipe the floor with everything else that we're looking at right now. But if I don't keep learning myself, then I can't put my hand on my heart and keep teaching. So I really thought an indicator session, looking at a new one we haven't considered before. We actually have, because we do the drawing one on the, on our London Open breakout session. In fact, let's go and put the DAX on there. Let's scroll back to 8 a.m. for the lob for Monday, and let's see what the lob for Monday looked like. Was it any good? I have no bloody idea. There is the lob. We'd have to put a bar. I like to go at least 20 minutes. So that means 8, 7:40, and I want a box. I want this box. Boom. And I can go to about 7:40 and draw a box. Now, if we move it, there's the high, there's the low. In the minute, that bar closes at 8, so this is the minute. There's a problem there, isn't there? Because it's broken out at the top, and it would have nailed you. Without our indicators, without our strategy on there, without divergence, because I'm pretty much sure there's divergence on there. Without that, we would struggle here for sure. Let's go and put our Darvas box on as a proper indicator, one that is no, what's the word? No what? No interpretation of. I'm not like, you know, my drawing doesn't matter. That's subjective. This is not subjective. That's it. So it's already broken below. I'm going to smack a MACD on it as well. How could we not want a MACD when it predicts the future? How could you not want a MACD? And when we look at it, oh, look at that. I kind of knew there would be. But, you know, when you look at it and then people can't say, oh, but there wasn't. Higher highs, lower highs. Say what you like. In sell hopper mode. So what's your bias? That gives you your bias. If you've got a, oh, I think it's a buy, well, you're thinking. What are you thinking? We don't do the think thing. We do the obey the rules thing. And there, then, is our Darvas box breakout sell and the potential, I'm going to say 780. So you must be about 785 there. And there is 725, I don't know, about 40 or 60 pips in there. Where would you have gone in? Oh, yeah, there on the line, on that line right there, Mary. On the, with this Darvas box, that's where I would have gone in. That's the break. I wouldn't have considered this buy because we're in sell hopper mode. So the buy would have been a non-runner. Absolutely. It's just some weird spike testing. What's it testing? A big round number. So it tests it. Look at the indecision here, open and close together. Big spike at the top, big spike at the bottom, and then we break through the line. I'm going to clear those drawings so you can see it more clearly. We break through the line in this bar here. Breaking that low is the better entry, to be honest. It really is. That's the better entry. But without the strategy on there, and let's have a look. You know what I'll do? I'll end the recording and then we'll load the T2B2 on here. Okay? So, for anyone who's watching the recording, thank you very much for watching. I appreciate you. Please trade safe, and I'll see you on the next session.